All right. Hello, everyone. Welcome back to the Tradeify Crypto Live. And
Yo, yo, yo,
we
yo,
had,
yo.
and we had a really great fall on Bitcoin yesterday. I mean, it was just dying even after stream. No single retracement back. But I think,
Jonathan was
yeah,
just
Jonathan
you
was the
couldn't
only
shut him
one
up. He was
winning.
he was like gleaming with joy at
Yeah,
the win that he got on that sell. But it was a good shout in fairness to him.
yeah,
Very, very good trade. So I think he went long now, didn't he?
yeah. He went long.
Yeah, no, good sell off on there. Let us know in the chat, guys. What are you looking at?
Yep.
And we'll take a look at anything that you want us to take a look at. How you been doing, Ayush? It's been a while.
Yeah. And I'm just doing really good with my new internet connection. I feel June is my first. I feel like I'm very new to Tradeify crypto when I hear everything clear. Finally, with the stable internet.
We've got Anastasiia in with us as well. Anastasiia, good to see you.
Yeah.
Hey guys, how are you doing?
Long time no
Doing
see.
great.
How are you?
Long time.
Long
They're
time.
reuniting the dream team at Tradeify.
Finally. How are you,
Yeah.
Mike?
Yeah, I'm good. I have finally moved house, so I am in my new attic, my new office that's also a dumping ground for all sorts of random crap. So finally moved. So looking forward to getting back into the markets and looking at the charts again. I literally haven't looked at the chart in about 2 weeks.
Wow.
So yeah.
But sometimes it's good to take a break. Come on.
I mean, in fairness, this wasn't a break. This was like a forced departure from things. This was like, me just having zero time for anything other than packing, unpacking, and moving. So yeah, but it's all good. It's all good. How about you? How's things?
I'm also moving, so I feel you.
You're moving. You had a nice place in where you were before.
Yeah, forget about it.
Okay.
Let's call it the forced break, like you said as well. Forced moving, like you call it.
Got you. Fair enough. Let's see who we've got in the chat. We've got Glenn, we've got Johnny, we've got Maverick, we've got Zach. Good to see all of you guys. Hope you're all well. We've got MKC as well in the chat as well. Let us know what you're chatting, guys. What you're trading, sorry. Johnny's trading gold. Man after my own heart. Johnny is on fire in the chat. So yeah. Ayush, we've got your charts open at the moment, I think. What are you looking at the moment?
Yeah. So it's a chart of Bitcoin and Ethereum. We are at the high time frame support area on monthly time frame. So I feel we might see a good push higher, and not really saying as bull run will start from here, because we don't really have any aggressive buying coming in currently at this support zone. So I think I still need to figure out good areas to take this thing much more lower. So I'm expecting that we might continue higher till this monthly support we have in the Ethereum chart. So I'm expecting somewhere around here we might see good retest back in the zone and continue much lower on Bitcoin. And I think gold has been really treating me well, and I feel like I'll be like PaxG, or maybe I'll come into your guys' team and stay with Anastasia and Mike. I've seen both of you trade almost all the time gold, and you guys can count me in as well, because it's the best pair with the I mean, better than NQ. I must say. I think I don't really have to wait for 9:30. Just some good volume nodes and some aggressive selling coming in, and just 1:1 and done. Best pair to trade. Yeah, it gives many fake outs, but we can manage that. And also, we are going to learn a lot today from Anastasia analysis on gold. So I'm the one who's more excited than you guys.
So we've got Anastasia coming in with a full-on breakdown on gold. Is that right?
Yeah.
Not sure about that.
Or maybe then I have
It's
to.
about the daily thing at this point, to be fairly honest, Mike. But I can't really say that, it's about gold is like you like it until you don't. You know what I mean? You you get used to it, and for you, it's like, oh, it moves so nicely now, and then it starts moving differently, and you're like, what in God's name is happening, Yeah. So this is gold. So don't relax too earlier.
Gold is like gold is one of those things where anyone that I know who trades gold has a love-hate relationship with it.
Yeah.
Like they love to hate it. They love to trade it, but they love to hate it because gold, it can just chew you up and spit you out in no time. Because the thing with gold as well is that gold it's not driven by one particular economic factor.
Yeah.
It's not driven by one particular fundamental or anything like that. And there's so many people trading it. It's traded physically as well as as a CFD and as the futures and everything else. It's such a complex instrument that it can be shifted by not just the value of gold, the mining industry, right? That's one element to it. It can be shifted by the strength or the weakness of the dollar, right? It can be strengthened by so many different, or weakened by so many different factors that you can't really see it coming. So because of that, it has that volatility and it has that movement, but it does make it very, very hard to kind of to manage because it moves so fast. I find it has a very quick way of triggering emotions. It can kind of very easily draw you into over trading, draw you into revenge trading. You get those fake outs, as you said, Ayush, and then all of a sudden you're just trying to keep your head above water, right?
Yeah.
And also, it's just different price action, right? At the current moment, gold is mainly consolidative, while soon it's going to start moving, for example, in a trend, and that's completely different trading cost, trading approach than at the current market conditions in gold. So it's different. Either you have like approach for all of those market conditions, which works, or you have a different one, but you need to get ready because it moves, like it changes the volatility, changes the behavior a lot of the times. Also with this fake out, sometimes it moves with absolutely zero retests, so it's different. My screen actually completely popped out for some reason again. Okay, here we go. So I'm if it comes to gold, let's start, since we are talking about gold, our favorite. Let's start with gold, perhaps. I need to load a little bit more days here for it. But if it comes to the current situation on gold, we are kind of located on the same level where the price have been multiple times. So we are testing the zone between pretty much 44.65 and 44.85. It's been the zone since the beginning of May, middle of May, since we've been consolidating here. We did have this fake out. Just by the rule of price action from here, I would be expecting the continuation to the upside again. So from here, I'm mainly looking for bullish movement until the end of the range once again. But this is a price action perspective. If we talk about, for example, volumes, we are below the current monthly point of control. And yes, the month has just started, but it's been 3 days, which means for the past 3 days, majority of the liquidity, so majority of the order flow was negative for gold. Most people were selling. So there is a selling pressure, in other words. Last month was also majority of the volume orders were above the current market price. And if we take into account the fact that gold has been consolidating for the whole past months, right, for the half of the May, and the majority of the orders are above the current price, it might not, we might continue the consolidation, but it also might mean that in May, the big institutions were accumulating short positions within this range. because it's currently the average fill-in price is currently above the market price. So it might also be a bearish sign. The contract point of control is also above the price. So from the technical aspect, from the price action, I'm kind of bullish. From the volume perspective, I'm not so much bullish. There are two scenarios that I'm waiting for gold in general. So I'm waiting for, and wait, I'm gonna adjust some volumes just a little bit lower. Here, 1 second. Here we go. So I'm waiting for two different scenarios. Either the price breaks below 44.65 approximately, let's say, right? And we most likely gonna stop around, and that's futures quotes, right? So if you talk about PAX-G, it's gonna be slightly different quotes, but because the main trading asset is still gold futures, so I always rely on this and I trade PAX as a result of it. So if we look at for 44.55 level, if we break here, we're probably going to have a retest because there was some volume, some pullback in this zone, more or less. Again, 44.70, 44.85. And then most likely the continuation lower. So from here, if we do break below it, I would be looking for some shorts towards 44.25 or even 4400, right? So somewhere towards this area. Now, this is only if we break and close below 44.65 finally. So I wouldn't trade this movement, essentially. So this is not something I trade, and this is not something I trade. So I would only trade the last, so after the pullback, so sell the pullback. Or I'm also looking for eventual continuation up and potential longs on gold. I was long, this movement I took. I closed the trade because there was more volume here and the price started to pull back again. So I closed a little bit lower than dynamic level of the months. So, and I'm waiting for more potential movement on gold, like for longs, but I do want to see some buying momentum. I preferably want to see the price moving higher somewhere here, candles on 30-minute time frame closing above 44.97, 4500. I want to see asks coming in. I want to see increased volume on the move up, supporting the movement. In other words, because we are in the range overall, I really want to see some confirmation of buying pressure before I'm going to go long on this. And if you look at their order flow currently on 5 minutes, because lower than this doesn't make any sense to go, we are pretty much consolidating. So there is nothing. Maybe on the market opening, something is going to change, but the footprint is mixed. The volumes from the previous hours, so this is the hourly point of control, that's why it's so messy. But there's 3 points of control of the previous 3 hours. They're approximately in the same area, so there's nothing, we are above the value area low, we are below the value area high of the past 3 hours, so there's nothing currently. So that's why I'm just going to be waiting actually if it comes to gold, and I'm not taking any trades at the moment. Are you guys in any trades for PAX currently?
No,
I actually
not at the
went
moment.
long.
Did you?
And cut it. Yeah, it was a small scalp from this 5-minute candle.
Mm-hmm.
Also long from here, we had many sell big trades in this zone, getting them absorbed, using them as support when price closed above. So this was the trade, and straight to the point of control. This was what I captured on this chart. So this was the entry area.
Mm-hmm.
And I feel I'm also on trading. I feel we have this. Let's take a look at daily time frame. We have this wick which is acting as support. So yeah, I think I'm also gonna wait for price to do something in this zone. Not really in a way we can guarantee a trend continuation higher or lower. So if we close back below in this zone, so I feel we can easily go towards 4,390 on gold, or if we get some reaction, then we can continue higher. But we have good number of range volume traded in this zone, so I feel it will, if we go higher, it will consolidate before we break past this 4580 level to continue higher with good speed.
Yeah.
On gold.
Yeah, I'm not seeing anything clear cut on gold right now. If I look at the previous 4-hour candle, that closed technically bullish, but hardly convincing of a change of direction. So I think, like you guys, I can see we're sitting on a weekly level at the moment. And that's obviously kind of accumulating at the moment. On the 5 minute, you can see we're not really doing much at all there. So I'd like to see some kind of breaker structure, and then that's going to give us some more confidence as to what direction we're seeing. Let's see what's happening in the chat. Supposedly we've got Jonatan in the chat. He's asking, who's the best trader out of these three? Well, I don't know. That's a question for chat to ask. But we've also got a survey in the chat asking for your opinion on BTC, guys. Are you going short or are you going long? It's currently a 50-50 split. So yeah, let us know what your thoughts are on Bitcoin at the moment. From my perspective, looking at Bitcoin, I think we're gonna sit here for a while. I think we're gonna sit where we are for the time being. There doesn't seem to be any major reason right now for us to move around. I don't think we're expecting any major economic news just yet. We've obviously got NFP on Friday, so I think we're going to have a bit of an accumulation period leading up to that. But I can see us having a bit of a pullback going long again. That sell-off that we had was quite significant, so I wouldn't be surprised to see us pull back up to around the 70k area, maybe something like that. What do you think, guys?
I mean, after this big expansion lower, I feel we are in the higher time frame support zone, so it's like really an area where I'm mostly gonna wait. And because of this flush down, we have low volume node expecting in this zone, so I feel we might take a good retest back again and to continue lower. I'm not assuming that it will continue higher till we take out this low, I guess, on Bitcoin, because we have many Boris yesterday showed us that we have good number of liquidation below 61,000. So I'm gonna wait till we tap this level and see some sort of reaction, then we can look for different trend in Bitcoin. Till then, I'm actually bearish till 61,000. So yeah, we have good number
bearish,
of yeah. In the zone, we have good number of stop loss of buyers and stuff like that. So yeah.
Yeah, I mean, I think for me, I don't think we're necessarily going to see a sudden bullish trend form on the daily. I don't think we're suddenly going to see a correction back up and then we shoot off up into the hundreds. But I do think maybe for the if we're talking about intraday trades, I'd be looking maybe for some longs to take us back to 70, something like that.
I agree with you, Mike, because I'm actually looking at Ethereum, not Bitcoin, for myself. But I'm long on Ethereum with a very small risk now. And I'm going to be adding as well. If you can shift to my screen, then I can explain why what I'm looking at. Here we go. Thank you so much, Roman. So if it comes to Ethereum, we reached some of the major volumes, and also this zone here is one of the biggest zones as a support for Ethereum. Now, I don't really rely necessarily on support zones because I mostly rely on the volume, but it was quite a big volume here traded also on the previous time when we tested this. So I need to load more data here. But on the pullback, it's the first time since this consolidation here, and majorly since this movement up, when we did break the highs. So on the 30-minute time frame, we did break the previous high for the first time. So we had created the higher high for Ethereum. We also did have a lot of volume coming in here, which was the bearish volume, if I'm not mistaken. Let me just switch this. I was adjusting some parameters. And it might be, here we go. So we did have both actually buying and selling volume coming in, and finally buyers took over. So we had some profit taken probably from sellers and another sellers, retail trying to push further, which failed, and the price bounced back up. So besides the fact that we did break the highs, we did break the volume as well. Now, currently, if it comes to the daily volume distribution, we are above the point of control. for today, and also the price was trying to go slightly higher. Now, my two main scenarios is that if we're gonna pull back towards the previous lows and the yesterday's volume here, and also this major zone that the price was retesting before, and then this is a very good area for temporarily longs, like short-term longs for me, a day perhaps assumption. Or another scenario is if the price goes higher, we break towards the previous volume here, we create another high, so we close above the yesterday's point of control and the yesterday's not point of control, but the value area, point of control actually, and above the value area low, then pull back and then take a long from here. So one out of these two scenarios is something that I'm really looking for. Ethereum, I was analyzing in the morning both gold and indices like NQAS and also Nasdaq and also Bitcoin and Ethereum. And Ethereum actually looked the best for me from all of them. If it comes to Bitcoin, I prefer Ethereum, but if it comes to Bitcoin, we also had the same yesterday. So we had low, but also something that I'm really looking for the price action. Let's compare how the price was falling here. So we had a very straight drop, right? Almost no resistance towards the selling. Same here, we had a straight drop down. When the price approached approximately 67K, then 66, then 65, we started to chop. So the market created a choppy movement instead of the straight fall. This is one of the behaviors when the sellers are taking the profits and it starts like pulling back higher, but then it keeps going down, but the movement is not already so strong, so the sellers don't really have so much control and the pressure over the market anymore, and the price starts facing the buy limit orders. They absorb it, push up, the sellers try again, absorb and push up, and like it continues for a while until the reversal. We had the volume here on the bottom as well, which pushed the price higher yesterday, actually today over the Asian session. And now it's still technically below the majority of the volume, but we do have, every time the price reaches the previous lows around 66 and a half, 66.8K, we have a pullback and more volume coming in. So might also be that we're gonna pull back from the same zone here eventually, because in a matter of a day, let me delete this again and show, in a matter of a day, this is the daily point of control. This is the value area low of the day. So we are not below the value area low. We are mostly ranging, which doesn't mean we are bearish still for the day. For the day, we are neutral at the moment. So I still think that we might have a pullback. So I agree with you, Mike. I don't think we're necessarily going to turn all bullish now for Bitcoin, but it did reach my sell targets as well. And it's kind of something that I'm waiting for, if it comes to the just the bounce back up temporarily before the continuation down.
Yeah, I think what's interesting is if you look across the board, so Bitcoin, Ethereum, BNB to a certain extent. BNB's got a slightly different structure, interestingly, but XP, Solana, TRX less so, Doge to a certain extent. The only one that's broken the previous lows from kind of February when we had the big sell-off is ADA on the list that I'm looking at. Everything else has still kind of maintained that support, but ADA has broken through those lows. Now, I'm not familiar enough with ADA to know whether that could be a precursor or an indicator of selling lower. But if you see here, we've got our, let me draw a line from it. Oh, not that one. That was our previous low on that wick, and we've broken that there. So now all of a sudden we've got selling pressure coming in on ADA. Everything else, interestingly, ignoring PAX, everything else has had a nice bit of a reaction from it. Now ADA is still having a bit of a buying pressure as well, but curious. I mean, I don't know. Are you guys familiar with ADA at all? Have you seen any kind of confluence or any kind of synergies with other coins at all when you look at ADA compared to say Bitcoin?
I don't
Actually,
really look
no.
at it, so I'm not probably the best person to ask that.
No, I mean it's just an interesting observation, because you see everything else. Everything else we've come back, and even on Bitcoin, we're hitting those support levels like you were saying, right? So we're seeing that natural bounce. BNB, we're seeing a slightly different structure. BNB, we've actually broken higher and we've pulled back down, but again, we're still sitting on that support area. XP, the same thing. Big bullish candle back in February, and we're rebounding off that at the moment. The same with Solana. Solana's doing almost an identical thing to XRP. But ADA is that one outlier at the moment. Granted, my list isn't by far an extensive list, but it certainly does look like a curious one that maybe that is an indication of something else to keep an eye on. Glenn has also mentioned about hype. Now, Jonathan mentioned hype to me. I can't remember when. I think it was back in February. I might be wrong, but if Jonathan's still in the chat, let me know, Jonathan. But Jonathan basically messaged me and a few friends and said, guys, hype. Let's hype it up, because hype is going to go. Let's hype. And I'm pretty sure that was back in February. And sure enough, he messaged me the other day. It was something like 170% up from when he called it. So if it was around about that February time, at the moment, it is absolutely flying. And I know that he is very much a fan of hype. 175%, yeah, 175% ago is when he called it. I can't remember when it was, Jonathan. You have to tell me when it was, but it was a while ago that he called it. So, yeah, hype is doing very, very nicely, as Glenn pointed out. Probably
it's a Nasdaq of crypto.
Yeah. I'd be probably looking to look for a pullback and then get into longs on that. Right now, I feel as though it's a bit too far gone right now. Maybe look for, unless you dollar cost average into it, if you do it as an investment. But Hyperliquid is a great tool. Is one that we're using. Those of you that haven't seen, we have also now got stocks that you can now trade with us. If you haven't seen, if you want to, for example, trade Tesla, you can now trade Tesla stocks with us. So it's got a lot of use cases, which is what obviously gives hype a nice basis for investing into. And I still didn't buy. No, Jonathan, I didn't buy. I was clearly distracted by many other things. Let's have a look. We've got Intel as well. So you can see there, obviously the data feed is limited because we've only just started that. But yeah, guys, you can go in, you can start trading stocks, tokenized stocks through Hyperliquid. So yeah, exciting times for us here at Tradeify Crypto.
Yeah, actually, really, really exciting times.
What's your thoughts on stocks, Anastasiia? Because I know you're a veteran of the markets now. Let's be honest, right? I know you don't look at you. I don't want to age you prematurely, but you have been trading for some years now, and you've pretty much traded everything, right? What's your thoughts on stocks?
I've traded everything but stocks. Can you imagine this? I was buying stocks for a long term, some of the things, because, based on just macro outlook. Okay. Because especially when Trump was president, I was breaking it down like last year before his inauguration, and like before the elections, many things, like what is going to go up, which sectors. Obviously, the defense sector, extremely up, right? So that's something that we were talking about as well. So some of the things you can predict based on the approach, especially when the big shift is coming, like the president of the United States, like the change in the Federal Reserve, some of those things you can predict long term. If it comes to trading stocks, it's something super interesting for me because I trade volume, and the more liquid the asset, there is a sweet balance because the low liquidity causes slippage and gaps in the volume, and you cannot really analyze it. the super high liquid markets, like for example, currency futures, they are less reliable in terms of the volume because it's too liquid. It's so many market participants there that it doesn't really reflect like a big orders or something. Yes, sometimes, but not perfectly. Let's say it like this. Yeah. Gold, oil, S&P, NASDAQ, they are much better. Now for stocks, I think it's going to be super interesting. Mm-hmm. I didn't get into this yet, but now I will, especially with the fact that we can trade the digitalized stocks on Tradeify crypto. So that's coming. I think that's finally the right time for me, definitely, to also get into the stock market.
We're taking Anastasia's degenerate level up another one. She's literally going to collect the entire collection of all possible assets to trade. Here with Tradeify crypto, we're going to get her into stocks trading now. This is
now, as you can see, I trade crypto already.
Yeah,
stocks
exactly.
Are coming.
That's what we want.
I started with crypto 10 years ago, and now the loop is kind of closing, The loop is closed. Absolutely. Now I can go to the next one. Now it's stocks.
Good stuff. Ayush, what about you on stocks?
Nothing. The only thing I would like to do is buy Nvidia.
Should have done this before the quarterly reports.
Yeah, exactly. Yeah. I'm not. I mean, I'm not. A lot of people have asked me because I've done a lot of work on AI in the last couple of years. A lot of people ask me, is it a bubble? Is it not a bubble? And everyone's got a different opinion on it. I don't think AI is a bubble, just like the internet wasn't a bubble back with the .com, right?
Yeah.
But the problem was that there was so much money that flowed into the internet at the time. The infrastructure wasn't there. The opportunity was there, absolutely, but the hardware wasn't available, wasn't ready for it. And I think that's going to be the same problem with AI. I think AI is going to be, in a way, I think there's going to be a bit of a bubble to it, that everyone's overhyped. There's loads and loads and loads of startups all sprouting up from AI, and only so many of them can survive. And as some of them start to die off, as some of them start to fail, then questions will naturally start to be asked of the other ones. And the fact that, so many of these firms are basically investing in one another, none of them are profitable, except for NVIDIA. But even NVIDIA is spending money on these non-profitable organizations on the expectation that they're going to be in the future. It's an interesting market to be in for sure, but I'm expecting a correction when it comes to stocks. When it comes to the market generally, I'm anticipating that we're going to have some kind of correction, which is great because if you can trade stocks, you don't have to worry about holding them for long term. If you can trade them, you can buy them and sell them through Tradeify crypto. Then hey, you can make money from the crash, right?
Yeah. If it comes to the stock, I think I'm also quite expecting the drop because I was on NQ and AS in the morning, and let me just open some of the charts. But essentially, we had a huge run for the all-time highs, both for ES and NQ. But the problem is that the only driver, the main and primary driver for those were the reports of NVIDIA and the rest of AI this week. Because if it would be something else, then the rest of the risk assets would also quite respond at least slightly, which we didn't have any response, for example, from crypto. Quite the opposite. Crypto was actually dropping significantly the last days, which is just another confirmation that the main reason behind the all-time highs for both ES and NQ was the reports of AI companies. So I'm expecting some correction, maybe not necessarily like immediately, for example, right? But it might not be immediately. But I would be very careful with buying it and holding it now long term, and would be watching, through some of the aspects of, for example, the labor market data that is going to be coming this week, because that's going to be the information about the next interest rate for us as well, which is going to be influencing stock majorly. So any quite negative news can also drop the stock back down where we started from without AI reports. So I would be really, really careful. If it comes to ES and NQ, I was looking for NQ being more bullish, obviously, which it is right now. I'm still looking for the continuation to the upside potential from here or from this area below it. So let's just have a look at NQ first. So from here or here as well. So the reason that we are the fact that we are on the all-time highs and the fact that I'm still looking for the upward movement, also one of the reasons that I'm looking for Ethereum and Bitcoin longs.
Yep. Mm-hmm.
You know, so that might be also the high risk assets. They quite go together, right? More or less, depending obviously on the reasoning behind it, but they do majority of the time, especially the last years as well. If it comes to ES, situation is a little bit different. So we have the majority of the volume here, and I'm expecting from this zone the continuation to the upside, very roughly, right? So approximately 75.96. And then 75.76 approximately. So when ES approaches this zone and when NQ approaches the other zone, I'm also expecting the push back to the upside on crypto, maybe during the market opening, for example. And actually, we are dropping now because we did have the PMI services coming out, if I'm not mistaken. No, the PMIs come at 4 only, so in 1 hour and a half almost. Mm-hmm. Yeah. Tomorrow we also have their initial jobless claims, continuing jobless claims. We did have the job openings. Funny enough, the NFP positively is expected to be lower and unemployment rate higher, which is practically impossible if you look at initial jobless claims and continuing jobless claims dropping over the past months.
Yeah.
Those openings report that we got also shows more job openings, which shows the demand for the labor. And in US, and quits are on the lows for weeks already and keeps dropping, which shows that less people are losing jobs and quitting jobs. So I don't know how the NFP is expected necessarily to be, NFP lower, unemployment higher, hoping that the rates are gonna stay or be cut, but doesn't really look so positively this week.
No. It's NSP, because NFP has really caught people off guard a lot lately. So I mean, the forecasts, as we know, the forecast is like trying to predict the weather sometimes, and as much as you might want to hope for sunny skies, it's always going to rain anyway someday. So but NFP has been very, very unpredictable for anyone at the moment, and really kind of bucked the trend against forecasts. So I think this Friday could be an interesting one. Could also lay the groundwork for an interesting weekend on crypto as a follow up to that. In the chat, Jonatan is saying that it's 100% a bubble and .com was a bubble. Just because it's a bubble doesn't mean it's going to be anything negative. It's just how the markets work. Market cycles move from depression to euphoria, boom and bust. And this is definitely an AI euphoria. There you go. You've had it from the master himself, Sensei, as Ayush likes to call him. So there you go. Ayush, what you look at stocks and look at the indices at all?
Yeah, I actually trade them. I trade.
Yeah. What are you thinking? Because I got to say, I'm looking at the indices, and I reckon I agree with Anastasiia that maybe short to medium term, we can be pushing for those all-time highs and taking those again. But I really think that we're at some point in the coming months, we're going to be heading into a serious correction of of value of those stocks and therefore value of those indices, don't you think?
Yeah. I mean, after all of these events we are having in the market, I think all of this, and also we looked at the liquidation map. We have good liquidity resting below, so I'm also waiting for the bear move to come. So on lower time frame, I don't really care about what kind of event we have. Sure. It's just me and some volume profile and some aggressive trades. That's all I do, the same way I trade on gold as well. So I'm pretty much relaxed in terms of this holding these indices and stuff. But if you talk about Forex, the only market where I trade on higher time frame as a swing trader.
Really?
Yeah.
Interesting.
That's why I called Jonathan Sensei, just to learn something from him.
His ego will be very happy to hear that. I'm just having a look to see if there's any movement on the markets at the moment whilst we're talking. There's nothing really significant. We've had a bit of a breakdown on Ethereum on the 5 minute, but we're still holding that 1867 area as our low. Bitcoin, similar sort of structure. Pax has broken past the 450 area and is now just retesting it. So we might start to see some selling pressure in Pax, at least down to 435. What do you guys think?
I'm actually yeah, Anastasia is saying something. I think she's holding the long as well.
I am not in longs. I don't know.
You're in longs on Ethereum.
I'm not.
thinking something
for
like
Pax, I'm not taking any trades.
For Pax, I think we are. I think we still need some data that are we going to respect this support zone of high time frame or not. Then only we can have the bias for longs. But as of now, I feel we might continue lower. I don't know. It's just because of the.
I like that structure. I do like that structure. On the 5 and the 15.
For short.
We're getting a bit of, for shorts. We're getting a lot of momentum coming in right now. So it might not be the best time to get in. Wait and see how this current 5 minute candle closes in the next however many seconds left.
I absolutely don't trust neither longs or shorts for gold at the moment, because we are on their really massive support.
Yeah.
It's a decision-making point that we're gonna pull back again to the top of the range from the 15th of May, or we're gonna continue lower now. So I am absolutely not taking any trades on gold now. I'm holding Ethereum longs still, but with small risk, and waiting for the setup to be confirmed to add potentially more volume. But for Pax, I'm still, I think I'm past until the market opening and something gets more clarified.
Yeah, it's closed that 5 minute candle, I think, hasn't it? Yeah. So that 5 minute candle's closed. Closed quite strong. So for now, maybe not. But that's my trade idea on that one. We've got this weekly level that we've been bouncing around for quite some time. And then we've got this daily level down towards 4,410. So that's going to be the trade idea if I start to see some better rejection of this area. Ideally want to see some kind of wick rejection or something like that on there. And also taking the high on this 15 minute is what I'd be looking for. Something along those lines with stops just above is probably what I'm going to be looking for. Something like that. Let us know what you're looking at, guys, in the chat. We know that a lot of you are fans of gold, but if there's something else you want us to have a look at, then let us know. Obviously, we've got stocks in there as well, so make sure you go and check those out. If you've got your account with Tradeify Crypto, you can now trade tokenized stocks through hyperliquidity. So that's a new feature that we've just released. Plenty more features, plenty more improvements and stuff coming our way. I saw somebody asking in the chat, Glenn was asking whether we'll be getting oil like we got gold. I don't know, but I will check it for you, Glenn, and we will let you know. So if there's demand for those sorts of things, we can do that as well. No problem at all, of course. You can, of course, obviously trade oil. If oil is something in particular that you want to trade, then you can also trade that through our futures, Tradeify futures. So make sure you check that out as well. Cool. What is happening in the chat, guys? Let us know what you're seeing in chat. If there's anything in particular that you want us to have a look at, then we can do that. I'm going to have to dip off in about 10 minutes, but I'm assuming Boris is going to be joining us. So we'll see him shortly. In fact, he's just messaged us, or Jonathan's just messaged us saying that he's going to jump in a minute. I must be saying something that's offending him, because normally Jonathan only jumps in when I've been talking too much or said too much. So we'll see. Are you guys seeing anything taking your fancy?
Not right now.
No, it's not really, is there?
Still the same for me. But Bitcoin is pulling back above the volumes from this week, so it's pretty much once again, it was looking bearish for a second and then starts pulling back up during like in the middle of the consolidation. So I think we're gonna stay there. Chances are we're gonna keep consolidating until tomorrow and the first data about their unemployment claims, or until Friday and non-farm. That also can be right. The whole crypto market, including stock market as well, is going to be mainly consolidated until non-farm, maybe even gold, because technically we might continue consolidation here before the continuation on one of the sides. However, if it would continue the consolidation, for me, it would be the sign of the break to the downside coming, because if you look at the response towards the same level in the past, we always responded quite significantly aggressively. So it's either for me going up now, or if it's consolidating, I'm going to be looking for the bearish continuation, because for me it's going to be the sign, okay, sellers are accumulating their positions to potentially break this level, because the response towards the previous support is absolutely not the same as it was before. So yeah, let's see.
Indeed. We've got some questions in the chat. Lucky's asking, will Bitcoin hold 65k?
65.
Anastasia is expecting some longs on Bitcoin. I think is what you said earlier, Anastasia. Are you still confident?
Yeah, still the same.
Yeah.
I'm expecting the price to hold about 66, 65 for a moment. It depends on what timeline are we talking about. Is it going to hold within a month? I'm not sure. Within a few days, I'm more bullish than bearish. June, the whole June above 65, I don't see this coming. I think we're going to go lower during June. But I am expecting the pullback to the upside with the targets at least 69 and then perhaps 71k, 71 and a half.
There you go. Lucky, there's your answer. Web3 H2X. Ayush, you said you'd explain the lot size calculator, but the stream ended. Can I expect the explanation in today's live?
Yeah,
Ayush,
I mean,
apparently you promised to show Web3 how to calculate position size.
And I'm really sorry about that. I think we had last 2 minutes left before we end the stream, so we were in really hurry to go and finish our task. So yeah, I think to calculate, and first of all, what account size you have is 10k. So I'm assuming that if you want to risk like let's say $100 on a trade, simply you have to do is risk divide by stop loss in points. So let's assume on Ethereum, if you want to go long, let's go on higher time frame. I'm not really fan of lower time frame anymore on crypto. On main pairs, if you want to go long, you can see we have 61 points. So 100 divided by 61 points of whatever lot size you're going to get, which you can and you will get your lot size. So it's risk divide by stop loss in points. Then you will have your lot size. I don't know why am I stuttering so much. I think I shouldn't have drank cold water before joining the stream. That really mess up with my.
If it was coffee, I'd understand, Ayush, but cold water is going to make you stutter.
Yeah, that's what really happens with me when I drink water with ice and stuff. Wow. My tongue really gets like in that way where I can't pronounce some words.
Wow.
Okay, well, we need to keep Ayush off the ice. I never thought I'd say that phrase, but there you go. We'll have to wean you off it. We are seeing a lot of momentum and a lot of volume coming into gold right now
my
on the
God.
1 minute.
Yeah, bullish.
Really pushing hard.
Yeah.
Anastasia, I've never seen you. I mean, maybe I missed it, but do you really take seriously low volume nodes as like supply demand zone?
No, never.
Why?
I don't trade
You don't trade low volume nodes?
because by the logic, the low volume node and how it's formed is meaning basically there was no volume, there was no trading, there was no auction. If there was no trading within this, because how it's formed is that market participants obviously send the market orders, and then it gets connected with the liquidity in the market with the limit orders. If the market skips through the certain places, it's like which we afterwards call a low volume node. It's because there was not a lot of liquidity and there was not a lot of response from the market orders and the market participants. Putting it super simple, for me, it means there was no interest from the market participants in these areas. So if there was no interest there, why would it be a demand for the market? Let's call it like this. I use it if it's a really, really low volume node, but that's a very bad example because this was just like all range and things. So let's just try to find something, and I'm gonna explain. Let's say, like, for example, this area here, right? The low volume zones.
Yeah.
I would say that this is more of this is more like a magnet. You know, if you imagine the black hole in a space, it's kind of like, because there is no volume, it's like attracting to feel the volume in, like a gap in the market. But it doesn't mean, for me personally, that the price is going to have any response in this area because there was no interest towards this area before. So I consider those, if it's really, really low volume node, there was barely no volume or like a gap, that the higher chances and the probability is that the price is going to go there because of the vacuum, because of the low volume node, because of the gap, because of imbalance, however people want to call this. But if it's going to respond there or not, a pullback, it depends on other things, but not the fact that there was low volume. So just thinking about this for many years, because obviously, smart money and ICT, Jonatan's favorite, and so many people trade those things, but I never could explain to myself, why would I trade from the low volume if I trade from the high volume? Because there was interest, means that there is potential orders still left, means there's potential interest that can pick up if the price returns to this level. Why would I trade the opposite? You know what I mean? So I never traded the opposite because it just doesn't make sense in a chain of how I make my trading decision.
But actually, if we look at this low volume node and high volume node stuff, I've seen many times that when price enters the low volume node, maybe because of some limit orders we have in this area, they really work well as rejection zones on lower time frame for me. Like you can see this good bullish candle on 5 minute. This is something which really tempts me to go long and scalp till this VWAP of daily, which we have on also the point of control, and from this low volume node area. So I think maybe on higher time frame it is something which is not, and it actually makes sense on higher time frame by looking at the, like, why not trading at an area where we have good number of transactions happen instead of low volume nodes. But on lower time frame, I think the thing is different. And we have Jonatan with us.
Here he is, the man himself. He's too busy typing with aggression and anger.
We don't really.
Yeah. Hello, everyone. How's it going?
Good.
Oh my God, what did you do to your microphone? You literally just destroyed your microphone. Jonatan took out too much anger on his microphone, and now it's yeah, he's actually literally removed himself. There you go. That's how bad it was. Guys, I'm going to need to drop off because I need to take care of a few bits and pieces, and then I need to go and collect my wonderful children. But I see Jonatan is slowly sorting out his technology issues, and I'll be back for this in a second. So I will bid you farewell, and I'll see you guys soon.
And we have Jonatan's speakers.
Jonathan speaks as well. Yeah.
No, it's not my speakers actually. I don't know where that's coming from. Can you guys hear me?
Yeah, we can hear you.
But I hear in the background.
Yeah. Maybe.
Okay, it's gone now. Okay, good.
Because-
All right. How's the sound? Everything's good?
Yeah, it's
Yeah,
perfect.
good.
All right. Good stuff. Good stuff. Good stuff. What are you guys up to?
Everything. We've discussed pretty much everything this hour. Crypto,
Nice.
stock index futures, gold, stocks.
That's right. That's exciting. We're able to trade stocks now through using Hyperliquid as a liquidity provider. So that's pretty cool. And I do maybe think we can also trade. I have to confirm that, but I think we can trade S&P 500, and it's not it's the actual official S&P 500 licensed by,
See me?
not CME, the ones that Dow Industries or Dow, like the ones that are actually listed S&P 500. Who are the ones responsible for the S&P 500? Like the ones who created the official S&P 500 index. Is it Dow Inc? Or is it Dow? Okay, so it's SP Global. SP Global. Right, okay, so it's just called the S&P 500, S&P Dow Jones Indices. Yes, okay, so S&P 500 is owned by S&P Global, and it's called S&P Dow Jones. And anyway, the official, it's actually the first official licensed S&P 500 perpetual futures contract, and it's trading on Hyperliquid. And I need to see if we can actually trade that. That would be really, really cool if that is possible. Oh man, I love how you snap your fingers like that. How you crack your fingers, like it's like when I watch those shorts of like people go to the chiropractor, whatever it's called, that breaks people's back. Oh, I get such a nice feeling when I hear that. Can you do it again?
Yeah, because I feel I get chills, and it's absolutely not the pleasant ones. Trust me.
Okay, well, let's spare Anastasia that feeling then. You can
it's
send
the
me
same as if someone is like scratching something on their calc board. That's the feeling.
Yeah, that's horrible. That is horrible. But yeah, Ayush, you can send me a voice note.
Sure, for sure.
Crack your fingers. Send me a little voice note. We can do that. Okay, so let me share my screen here, because I do have a little presentation. It's gonna be a short but sweet little presentation for you guys here today, and it would be cool if you, Anastasia and Ayush, could stay on. We can perhaps just discuss what I'm going through here. Before I go into the actual presentation, I want to show you guys the trades that I've taken lately. So Roman, if you can switch over to my screen, that would be great. Okay, so the Bitcoin short that we've entered on, well, when was that? The 13th of May, hit that TP yesterday, or actually today, on that massive dump. So what I did here was something that I don't recommend to do, and we're going to talk about trading with the primary trend in the actual presentation. And I talk about whether you're going to be a day trader, a swing trader, or a position trader, you want to be aligned with the primary trend. So this trade right here that I'm going long here, and as you can see, it's a negative risk to reward trade, right? Where we also have let's see. So it's a negative risk to reward trade, right? But the reason I have a very, very wide stop is not because I'm thinking that stop is going to get hit, right? But I want to make sure that I have a very wide stop to account for any liquidation spikes, right? Because when we had this big move, obviously this could have been a liquidation cascade, right? All right, we got Boris as well. What's up, Boris? How's it going?
It's going well. How are you guys doing?
Doing great.
Doing good.
Hey, Boris. Good to see you.
Good to see everyone.
You're in a new place every day.
That's what.
Is it because you're traveling around, or is it because you're getting thrown out?
That's good.
It could be a combination of both, but mostly it's a matter of me.
You could be
finding a reliable
with a laptop. Like that's we don't really know.
Look, I'm just trying to find a reliable connection, pretty much all the time. But I found one. But next week, I'll be broadcasting from a first world country. Thank God, first world civilization, and I'm gonna ask my roommate to do a speed test just to confirm that the internet speed will be, what's it called? Fiber optic. Yeah.
Yeah.
You need fiber optic.
Like I said here, the Bitcoin short hit that tip and then I reversed long, and the reason for doing so is because usually when you have a big move like this, you're gonna get some type of mean reversion move, right? So if you look at if you go down to the 15-minute, you can see that we basically have two important levels where we have this level that this one right here that once broken, we went straight down to that level where the move stopped. You can kind of see how we're consolidating around this area. So we might just move straight down, break this low time frame consolidation range, and then continue downwards. At that stage, I might actually close this trade for a very small loss. The reason why I have a very, very wide stop loss here, and it looks to be a negative risk reward trade, is because I want to keep this open overnight. And we know that with Bitcoin, with crypto, when you have a situation like this, it can easily continue and you might get another liquidation cascade. And I want to make sure that if that happens, I'm not going to lose an enormous amount of money, and I might actually still be in a trade for that other mean reverting move. So let's see if I can find the other trades. So I'm also in a long on Sol, also looking for that bounce up to the middle of this range, and then TRX decided to get in on the pullback here, so looking for that, and of course holding the hype position, still holding that one for looking for a move up to 90. I'm actually thinking long term this is going to go up to 150. So I might as well just put the TP at 150 and then just ride this trend, because right now this is the project that is pretty much like what I'm thinking when it comes to hype. This is going to be the project that we talk about, like we're talking about Chainlink and BNB right now. I think Hyperliquid is going to be one of the foundational players within crypto, and I wouldn't be surprised to see ICE maybe buying up Hyperliquid, right, and just integrating Hyperliquid and everything they do from Nasdaq and the New York Stock Exchange or whatever. Maybe we'll see like the London Stock Exchange group buy it or something like that, because this has the technology and the foundation that is currently driving the technology behind the Nasdaq being able to trade 24/5, right? So Nasdaq is going to enable 24/5 trading, and it's built upon the same technology that Hyperliquid is doing. And I would argue that without Hyperliquid, we would not have tokenized assets in the way we're having it right now. Hyperliquid has really propelled that whole idea forward.
Yeah.
So
I think that's
this is
the
an
next
asset
narrative.
to watch.
I think the next narrative in crypto, or maybe just in like tech, is going to be decentralized exchanges or decentralized, exchange technology like Hyperliquid. Because I was just speaking to two not former, but they're still like heads of centralized exchanges, and they said they're shifting from the centralized model to the decentralized model, and so are a lot of traders. So I think we're going to see not Binance die, but they're going to shift from the this is maybe inside information, but they're developing their own DEX right now. So is Bybit. Well, actually, that's not secret, but a lot of these centralized exchanges are developing decentralized exchanges. And Kraken just released, or is about to release their first one, believe it or not.
Yeah, and I think. But there's going to be, there's going to be a situation where there's not going to be blockchain, crypto, and traditional finance. We're going to have a situation where blockchain is traditional finance, and then we have crypto. Like altcoins and Bitcoin are still going to be trading, right? Because of, you want to invest in a specific altcoin, you want to invest in Bitcoin. That's still going to exist, right? But the whole blockchain technology is probably going to intermingle with the whole financial world. I don't see a reason why that shouldn't be the case, right? Especially, we have the discussions about central bank digital currencies and things like that, even though it doesn't seem like that's something that's going to be implemented in the short term. Long term, with the way, how should I put it, like the way government is evolving, it's becoming more, there's more governmental overreach in terms of people's financial life and privacy, etc. So that's always been the direction that we're moving, right?
And actually, Jonathan, do you know anything about FICA laws in Europe? Because that's one thing I was discussing with one of my ex-colleagues. Was a lot of her European clients, she works at a crypto exchange, they're moving away because of some FICA law, and they need to get their capital out, and there's something happening with that in Europe. I'm not too familiar with the regulations there. Like maybe you know something about it, being from Sweden?
No, I don't have any insights into that, really.
Okay. Thought I'd ask, just in case you did.
Yeah, guys, let me jump into the presentation here. I'm gonna do a quick presentation, then kind of lay the groundwork for some discussions I want to have here in the last hour, and then after all of this, we'll do a little giveaway as well. So let me just quickly bring everything up here, and I will start something for you guys here. And let me just go in and check so I'll make sure that I have the comment section up and everything looks good with that. YouTube says that there's something went wrong. So let me just refresh everything, because right now I can't see the YouTube chat, and I want to make sure that I have the YouTube chat open so that I can actually see the comments. So if you guys just give me 1 second, and I will make sure to have this. Okay, I just need to log in again to the YouTube account. Give me a second.
In the meantime, Ayush, what are your thoughts on Bitcoin today? Like, I was expecting a bigger bounce. It looks like we're not really getting much of a reaction.
Yeah, we are actually trading at this high volume node on the Bitcoin, and I feel if we close back above, we can easily go till 70,000 level and continue lower. So 70,000 is what I'm looking at for the retrace on Bitcoin.
Okay, I'm ready. So you can switch over to
go ahead.
My screen. All right, so guys, this session today is called the trend. All right, and I'm gonna be doing this 1 hour every Wednesday, once a week. And what I want to make sure is that people watching this session understands that it doesn't matter if you're a scalper, a day trader, a swing trader, or a position trader. This is all about one idea, okay? Understanding the overall structure of the market and understanding the primary and dominant trends within the markets, because I believe that it's not about viewing the trends in different ways. It's about aligning with the trend in different ways. There's only one dominant trend out there. There's not multiple dominant trends going on at the same time. I mean, there are if you look at different markets, right? But if you look at, for example, Bitcoin, there's one trend. And you can trade that trend in different ways. But if you don't understand what that one trend is, then you don't know in what context you're trading. So for example, if you come into the market right now and you have no idea what trading is, what technical analysis is, you might not even know that you're in a bear market for crypto. I mean, you might go on Twitter or whatever, and everyone's, hysterical and all of that. And you might understand that the sentiment is bearish. But if you look at price, you pull up a chart, you have no idea what the primary trend is. And then you're going to start trading that and you don't have the context. Now, I would argue that it all comes back to this one idea, and this is important. Now, trends in markets tend to persist. Why do they persist? We don't really know. Like scientifically, there's a lot of theories out there for why markets trend, but there's no real theory where the scientific world and the academic world within trading has agreed that this is the single reason why markets trend. It might have to do with behavioral finance. It might have to do with mathematical reasons for even in sequences where you have random sequences of numbers, you can still, when you zoom out, see a trending behavior in price. Markets that you can't even trade are trending. Now you could ask yourself, why, if a trend is created by traders trading that market and they're trading based on their psychology, right, and the herd mind, then why are markets that you can't even trade, why are they trending? Right, so that's trends in the markets tend to persist. And the idea here is that when you trade with the dominant trends, the probability of success goes up exponentially. It goes up a lot. If you compare a long-term trading strategy with only taking longs in a bull market and only taking shorts in a bear market, you should theoretically have a much bigger and better hit rate and success in trading if you follow the dominant trends, right? So everything in this session will be built on this single line. Trends in the markets, they tend now to enter that trend, and then you ride it for a long. Because my PC has started lagging a lot. No? Okay. Now let me check if I can. I probably have Claude Code doing something in the background. Let me see if I can stop that. Let's give me a second. Yeah, my memory runs at 95% currently, so there's something going on here. Let me close down some stuff.
Oh my god.
Sure, what it is.
First time seeing Jonatan lagging.
Like I'm at 90%. I'm just going to close down some stuff here, and I will be all good.
I think it's getting a little better. At least now we can understand what you're saying.
Okay, no, so I had my memory at 90% and CPU is like at 9 or something, so I'm not really sure what's going on here, but I'm going to try to close down as much as possible here to make sure. Okay, it should be working now. Okay, is it better?
Yeah.
Okay, great. So, Now within a where are we? Why are we all the way down here? Oh, that's the end. Well, that was a quick presentation. Thank you for watching. Thank you. This is great. What a wonderful, wonderful start to all of this. Man, this is embarrassing. Okay, so what we're going to be looking at here, we're going to be looking at the markets from the lens of 3 types of trends, right? So we have the primary trends. Now think bull markets and bear markets, right? So if we're in the bull market, then the primary trend is up, right? And if we're in the bear market, the primary trend is to the downside. You can't be. It's still lagging, isn't it?
Yeah.
Yeah, a little bit, yeah.
Okay. Great. Let me... What is going on here? Weird. This... Yeah, but it says like, I'm looking at my browser, it's supposed to have 14 open tabs, but I don't have any tabs open. Okay, I'm gonna close down TradingView, see if that helps. Okay, I'm gonna start closing some Brave tabs from, because this is weird. This shouldn't have all of these tabs open.
I think we lost him for now. So are you guys trading any? So we have 11 minutes until the market opening, and nothing has changed. I'm gonna reload my trading platform in a moment, so because it was also lagging slightly, but I'm just holding the long on Ethereum still, and nothing else. So. Ayush, you are still holding gold?
No, actually, I'm still waiting for price to do something at this point of control. It's just ranging here.
Yeah, it's just ranging. It's probably gonna be ranging until tomorrow at least, or maybe even Friday, depending on how tomorrow's data count goes.
Yeah, and also we are at the higher time frame area, so I feel the same. And but it's good for a guy like me on low time frame. I don't really wait for big movements. Just 5 minute chart and good.
Yeah, I'm short on Litecoin. I'm short on Litecoin. I'm short on TRX. Let me zoom out to my trading view. I think Jonathan has an opposite position, but I'm not sure on which time frame. I'm on the maybe the 3-day time frame on TRX Tron. But I'm basically viewing this as a double top pattern. And I think Tron is going to go lower. And then Litecoin, we already discussed this yesterday. Let's see. Yeah, it's like a breakdown. Clash. Wow. Clash is actually up today by 8%. So Clash is doing really well after this recent dump. But I think overall Clash is going to come down in the near future. Roman, you seem like you're very invested in this Clash coin. Or is it like... Really? Wow. And then someone was asking about Dash.
For no reason.
Yeah, I don't know what's happening. Nothing's happening. The Clash is much more interesting. Clash.
I really like it when Boris randomly picks some coin and start laughing. You said the same thing you did on stream. I don't know why you laugh when you analyze Clash. You did something on the coin or what? Look at me.
Because the rise of Dash, I don't know, I have a very simple sense of humor. And then the only long I'm in is actually on BNB. Let me pull this up. So Binance coin. I will explain to you why.
On BNB looks dead. Why you're long?
Oh my god. It's not dead.
I mean, it's bearish.
No. Wait, never. It's having a retreat. Look, it had a 10% rally last week. Then it had a 10% pullback. And I'm just buying the pullback here on BNB because it had big news. I think Binance is going to allow 24/5 equities trading for international clients. So I think this is a good fundamental play. It's very different from my usual technical analysis, but I think BNB is very strong here. Well, not like at this current moment, but on the longer time frames, it is one of the healthier looking coins out there. So I think, and we're talking about BNB, we're talking about like the number one exchange but by volumes token in the world. So I think Binance coin has some potential here, even though like on a daily it has had a sharp pullback just like every other coin. But if you zoom out, it looks like it's just back to its range. So I think this is not a bad place to buy the dip. So basically long BNB, short Litecoin, short TRX, and short, I think I was short on Solana as well.
So are you waiting for BNB to hit the level, or you're already long?
I'm already long. I don't wait.
Yeah. Okay.
Right. Hopefully everything's fine.
Yeah. I think you sound better.
Yeah. Good. All right. Perfect. Let me see if I can share my screen. All right. It's been 24 minutes. I haven't done much of a presentation yet. It is what it is. That's technology, right? Sometimes, yeah, exactly. Sometimes you just get stopped out. Let me share my screen once again. And we will try this again.
That's why I really can't stand the trading during NFP week. It's like the closer we get to NFP, the less is happening, but normally Thursday. But at this point, it's like Wednesday and it's dead.
Okay, actually, I can't share the presentation. As soon as I share the presentation, it just goes crazy. Let me share the window instead. Let's try that. Okay, so I'm not sharing the tab now. I'm sharing the window. Let's see if that works. Okay, let's see if this works. Good. Okay, it works better. So when I'm sharing the tab, it goes crazy. Anyway, so we've talked about the importance of, reading the primary trend, like understanding the context that you're trading within. And one of the best ways of reading the trends is to divide them up into 3 different categories. And Charles Dow, back in can't remember when that was, but the late 1800s, right? Or I think like 1800 something, where he came up with the idea that later became the Dow theory. And the Dow Jones Index, for example, is based on him. And he talked about how the markets move in 3 different cycles, or 3 different types of trends, where you have the primary trend, which is the main market direction. That's the trend that usually lasts for months to years, right? So if you look at the S&P 500 right now, you zoom out and you will see that we're in a bull market because you look at the primary trend. And when you understand that you're in a bull market, you are understanding that through the lens of the primary trend. And then you have the secondary trends. Now, these are counter moves within the primary trend. So for example, if you have a primary uptrend, the bull market, a pullback in the uptrend is a secondary trend move. Okay, so because if you zoom into that leg to the downside in the bull market, you zoom into that, you will find that is a downtrend, right? So if it's just one move on the daily, it's going to be a downtrend on the lower time frames. And then you have the minor trend. This is what Charles Dow said. He basically called this the intraday fluctuations, but that was way before the time of intraday trading and scalping. Most traders were charting with point and figure charts and handwritten charts and trading days based on the dailies. There was no intraday trading and scalping back then, so you could argue that it's not just intraday noise today. It's a whole new trend within that minor trend. But understanding these categories can be good to understanding where you are in the context of the overall trend. And of course, as you guys know, the markets are highly fractal. And I'm not going to be opening and looking at the chat here because I'm afraid my PC is going to start burning or something if I open up anything new. I'm not sure what's going on here. Anyway, what we have right here is the idea that the markets are fractal. Now, this is simple stuff, and I would assume that most of you watching right now, you understand this, but it's still important to know, because if you have a primary uptrend, you zoom into that and you might see a secondary downtrend within that uptrend, and within that secondary downtrend, you're going to have a whole universe of uptrends and downtrends and ranges within the lower time frames. And this is where it's easy to get confused, right? Because when you hear the word "the trend is your friend," it's about the primary trend. It's not about the secondary trend. It's not about the hourly trend. It's about the dominant trend within the market. So the idea that the trend is your friend and that you always want to be aligned with the trend is the idea that if the stock market, for example, the S&P 500, right now we're in an AI bubble, AI euphoria, whatever you want to call it, we're in a crazy run to the upside right now. Now, there's going to be contrarian traders out there. There's going to be mean reversing traders who are looking to short this. They're going to get stopped out most likely. I mean, they're going to get lucky if this is the top and then it dumps, but most likely they have the odds against them. Because why? Like we talked about in the first slide, trends tend to persist. We don't know when they're going to end. We just know that if there's a trend, they tend to continue and can continue for a very, very long time. So it's very important that if you're an intraday trader or you're a swing trader, whatever, if you go long in the primary trend, no matter what time frame you're in, you're adding just a little bit more odds of success to your strategies. Now, this is also very, very simple, but I just want to quickly go through this, as this is the first episode of this series, if you will. Now, you want to read trend from price structure, because I've been getting a lot of questions saying like, okay, but what indicator is the best indicator to determine the trend? That's not what you use indicators for. Indicators are not used to determine trends and like what's the primary trend. That's market structure, and there's only really one simple way of doing that. It's looking at the highs and the lows. Look at the highs and lows, and that's the only real way to determine what the trend currently is. And then the indicators, they come second, right? So when you've identified the trend, it's the indicators that will confirm the levels. Like, for example, I know, Anastasiia, you're using volume profiles and the footprint charts and things like that. And I think, Ayush, you're also looking at, the point of control of volume. And obviously, that is a tool that you can use in the context of the trend, right? I mean, it's not really going to help you to say, oh, I'm going to short I'm going to short this point of control because price comes and tests it from the upside. But what if you do that on the 15 minute, and then you zoom out to the daily and you see, oh, we're in the biggest uptrend this market has ever experienced, you know, in decades. Maybe I shouldn't short that. Maybe I should wait for that point of a control to get reclaimed, or maybe just wait for you know, something like that. So the indicators are a tool once you have determined the trend by just reading price charts. And if you're new in the markets, there's no other way to learn other than becoming not new in the markets. Get experience. You're not going to be able to understand market structure and how to read these charts if you're new in the markets. So give it time. If you're new in the markets, go out and look at the market. Forget about the indicators. Just look at, okay, how do I identify what the primary, what the secondary, and what the intraday trend is? And then start adding indicators. Because if you don't have the context, then you have no idea what you're doing without the context, right? It's like my brain right now. I forget what I was saying, right? So the brain just forgot the context, and I you know, like that's how I work. Especially when I'm live, I'm having this presentation. I'm like, what am I talking about? And then the context just disappears, and that's why I'm not scalping, you know, because I'm kind of like retarded that way. Anyway, let's go to the next slide. Okay, so this is Wyckoff theory and also Dow theory. They kind of like they kind of talk about the same thing. They kind of come to the same conclusion that we have 4 different types of market phases, right? We got accumulation, markup, distribution, and the markdown. Markup and markdown is just, I don't know, fancy words for uptrends and downtrends. Accumulation, distribution, that's just ranges, right? Now, you need to be able to identify trends in the way that the highs and the lows communicate with each other, okay? Because everything's connected. All the swing points are connected, and they're trying to tell you something. It's like the markets, they speak a certain language, and that language is deciphered through looking at swing points. Because if the swing points are equal horizontally to the upside and the downside, it's very easy to understand that that is a range. And given the context of that range is also important, because if that range is the first range that has been developed after a downtrend, that then chances are that that might be accumulation. And if you're early to spot accumulation, you could either get in at the end of a bear market. Let's say you have accumulation and you confirm that by looking at structure and price, and then you add volume, right? You can just add volume and you can see that, okay, volume was declining on the downtrend, increasing in accumulation. There you have it. You're early in a potential new trend. Or you could wait for confirmation. And what would be confirmation be? Well, that's that swing points. The market's trying to talk to you through the swing points again. If you break this high and you create a new high, a swing point and a high, that is your first higher high perhaps in this trend, then that's a confirmation that the markup phase or the uptrend has now started. And now we're going to go into this a little bit later as well, but here you can have, you can apply, and this is why I want to emphasize the idea of no matter if you're a position trader, a swing trader, a day trader, or a scalper, it's all about this one idea. Identify the dominant trend and understand that trends persist, right? So let's say, for example, you are a mean reverting trader trading the secondary trend. This is the secondary trend. That's the move that goes against the primary trend. So that's a secondary trend. Now look at this. This might be the monthly chart or the weekly chart, but you're looking at the 4-hour and you're trading this downtrend right here, okay? But you're looking for this downtrend to revert back to the overall mean of this primary bull market. So you're going long in a secondary downtrend. So you're basically trading against the secondary trend, but you're going long here for a potential move up into the mean price of the dominant trend. So the idea that a mean reverting trader has to trade against the trend is simply not correct. A mean reverting trader can simply be a trader that is trading a secondary trend, but a dip in the primary trend and a move towards the mean of the primary trend. So I would argue that everything's connected, right? And in a bit, I will show an example of my own trading, how I do trade all of these different styles, but they're all aligned with the primary trend. So what we want to do when we have identified a trend is number one, first, we identify the trend as early as possible. Number two, we position in the direction of the primary trend. And number three is wrong. Should not say this because we do not anticipate the end of the trend. We don't know where the trend is going to end, and we don't care about trying to predict where the trend is ending, and we don't care about looking to take profits at a specific point. As a trend following trader trading with the primary trend, we want to follow that trend indefinitely, which means it's better to let your trades run in the direction of the trend and give the trade as big of a possibility as possible to really ride that trend for as long as possible. Now, there are some details here. For example, if you're trading the Forex market, you obviously can't hold the position for months unless you're getting paid in swaps to do so. And that's going to depend on what, maybe if you're trading Forex at a prop firm, it's going to depend on that prop firm, because some prop firms only have negative swaps. Some don't, but some do, right? So you get so that's important, right? When you're position trading. But that's the three things, right? You want to identify the trends as early possible, position in the direction of the primary trend, and number three, you should say manage the risk accordingly while you stay in the trend. And this is what I talked about here, the mean reversion in the direction of the trend. And I'm not going to go through this in detail, but I'm going to show you a perfect example of that on the Bitcoin short that I took, which was a move, a short against the local trend, but in the direction of the primary trend. So I'm going to talk about that. This one, never mind about this one. We don't have time to cover that one. Shorting the downtrend. Let's just skip this one. We don't have time for that either. So we talked about the three ways to identify trends. We look at primary trends, number one, secondary trends, number two, and the minor trends or the intraday fluctuation, number three. If you're a position trader, you are only trading the primary trend. If you're a swing trader, you're most likely only trading the secondary trend. If you're a day trader, you're most likely only trading the minor trend. But what's important here is that all of these are supposed to align. When all of these are lines, that's when you get most likely higher convictions. If you go long when the secondary trend is bullish and the primary trend is bullish, then the chances of success should, on paper, theoretically, be higher. Now, of course, I know that there's a lot of traders out there that trades against the primary trend and can be successful doing that as well. But it's kind of like swimming against the current. You have to work a lot. You have to be much more careful when developing systems that do that. And also, when I talk about swing trading on the secondary trend, it's important to understand that there's a spectrum here within swing trader where you can be an intra-week swing trader, and then you can be more of a trend following swing trader. And again, that kind of goes down to commissions and swaps at your broker or prop firm or whatever. But just because you're trading the secondary trend or the primary trend doesn't mean you necessarily have to be a swing trader. So this idea that you have to put yourself in a category of being a day trader, swing trader, position trader, you can kind of like be everything at once, right? Because a day trader can choose to hold the position for longer, which then turns into swing trade. And if you're going to be holding that position until the end of the trend and that trend never ends, then you kind of transition into a position trader. So don't put yourself in a category. Just understand that if you are aligned with the primary trend and you hold that position open, you can get what's called multi-baggers or the 10x trades, or especially in the altcoin market, you can get some insane winners by stepping out of your comfort zone and not necessarily saying, oh, I'm a scalper. But what if you have a scalp entry on a day trade or a day trade entry on a swing trade? That's how you can get some really winning trade. So I want to talk about this. Like, this is because in these sessions, I'm just not going to be talking about crypto, right? I'm going to be talking about crypto and Bitcoin in the context of the whole global market, right? So this is a great example that we have right now, and I'm going to be breaking these three categories down shortly. So my long-term portfolio, my position trading, right? Remember, I'm a position trader first, secondly a swing trader, and sometimes a day trader, but they all share the same direction, right? So I'm currently fully allocated to global stocks, and here I'm invested 60% of my long-term position portfolio in the world stock index, and then I have 30% gold, which is at 50% allocation right now, and I have 10% in Bitcoin, which is currently at 0% exposure. And you can see on the charts of the global stock index that it's very clear that we are in a primary uptrend. Therefore, I am fully allocated to the stock market. You look at gold, and it's not really clear if we are in a primary trend or if we potentially are breaking, right? I mean, you look at the monthly and the weekly on gold, and you're going to be like, yeah, of course, we are in the primary trend. But it seems that we could potentially be breaking that primary trend, and looking at the parabolic move on gold, I would rather exit a little bit too early than to ride the whole downside. And then on Bitcoin, we are on the primary downtrend, which means no allocation to Bitcoin. So it's the same read, right? We got swing trading, position trading, and intraday trading. This one I don't have to go through today, but the 3 points that I want to make sure that you bring from this presentation is: number one, trends persist. You don't have to understand why, because no one really knows. You want to trade with the dominant trend because that raises your odds of success. And with that, focus on price action first, market structure first, and then you use the indicators as tools to confirm your actual trading. And then number three, and this is important, position trading, swing trading, and day trading is essentially the same idea, but at different speeds. And here, you need to look at your personality. I know that my personality is very much aligned with position trading and swing trading. And while some of you watching, you're day traders, maybe scalpers, right? But you need to understand in what context position traders and swing traders would be trading that market trading. Because if you're aligned with the primary trend, you're going to be aligned with the overall forces that is driving and driving the cycle that the market you are in is moving with, which means you have the hidden forces that is market sentiment and momentum is on your side, right? And that's the whole idea with the saying the trend is your friend. All right, so that's the quick presentation on this. Now, any questions, by the way? Maybe you guys have some questions. Now I'm actually gonna pull up.
The audience has some questions.
Okay.
So what?
Let me see if I can
pull this up. A question from Jesu.p. When do you know the trend reverse? When do you know the trend reverse, Jonatan? I'm just quoting his question.
I'm gonna show you that. I'm gonna show you that right now, and it's great that you're reading the question because I'm not gonna open up and check the questions myself. So I can actually show you that right now, and this is a great question, and it might seem simple or look simple at first, but we can first look at the S&P 500 and kind of walk you through the idea behind why I think, or how I view the primary trends, right, in the S&P 500, and tell you guys where I exited the S&P 500 and where I entered the S&P 500, and how I also day traded that. It's the exact same thing on Bitcoin, which I'm going to go through as well. So if we apply the idea of the Schultz-Dow theory of accumulation and distribution, I should potentially have all of that somewhere here. No? Okay. So we can look at this as being distribution, that as being the downtrend, that as being accumulation, breaking above accumulation right here, starting an uptrend into distribution, right? So I actually got out of the market when we broke that low right here. And the reason why I got out of the market here is because we now broke below these lows right here, which I view as a distribution phase, right? Because we have somewhat of equal highs, we got somewhat equal lows here. We broke below that low, and then we retested the range from the downside, and then we broke that low. And I told myself, okay, if we because of the Trump tariffs that we had in April, if that is truly going to change the whole market structure and the whole geopolitical landscape, which I actually think it didn't do, right? That was mostly fear. But I would not, because what we saw here is we had a distribution right here. We tested the range low from downside, and we broke that low. Okay, and then we were actually in a bear market for about a year, right? Now, I do not want to be stuck in the stock market for a whole year, right? I want to be out of the market if that happens, right? Now, I will miss a lot of profits, but I will not have the drawdown in my portfolio and the drawdown in time, right? Because that money in the stock market that's going to be there for 1 year until we go into a bull market can be spent elsewhere, right? So how do I know that the trend is breaking? Well, you look at the structure. You have higher highs, you get higher lows, you have the lows breaking here, and then you have from higher highs to lower highs, lower highs and lower lows. Very, very simple, right? So if you learn how to identify the primary trends in the context of the distribution and accumulation phases, then it's quite easy. Like, for example, here, I was watching this as distribution, right? Which it doesn't matter if it's actual distribution or not. What matters is in trading with the primary trend, it's all about the you only want to make the type of errors that leads to missing out on profits, instead of making the errors that gives you a bigger drawdown. What I mean by that is you can miss out on profits as long as you miss out on the drawdown, right? And because I want to have stable returns, I want to have a stable long-term portfolio where the equity curve is slowly but surely going upwards with low overall volatility of the portfolio. So if I'm holding the S&P 400 from here all the way down there, it's a drawdown of 20%. And if it's a year-long worth of bear market, I'm going to be staying in an unprofitable position for a very long time. So I would rather get out of the market, not have that drawdown, but also, of course, not get the possible profit, right? Which is that's because my long-term portfolio is big, right? Which means because of the theory of marginal utility at high capital portfolio, it means that a 10% move to the downside on, let's say, a $1 million portfolio is going to hurt you way more than a 10% move to the upside. Okay, because if you have if you start at, let's say, $100,000 and then you grow that to, let's say, $1 million, making 5 to 10% extra is not going to give you the same utility or the same joy as the same financial gain gave you at 100,000, right? Because if you make 10% at 1 million, you know, you're basically doubling that 100K portfolio. And at that point, you would be euphoric, right? So to make that extra 10% at 1 million is very nice, but I would argue that if you're a risk-averse investor, losing 10% is going to be much more hurtful than making 10% will make you happy. And if you lose 20%, you need to make back even more than 20% to get back to break even. So long-term portfolio trading, you want to make sure that you minimize the drawdowns. So very simple. Look for the higher highs and the higher lows to break into a lower high or a lower low. Now, what is interesting with a chart like this, we can actually go to Bitcoin. Because on Bitcoin, it's very clear, right? It's you have the accumulation phases. We can add the Dow theory trends here. The distribution, accumulation, distribution phases here are very clear. You can also see that this is where we shorted, right? We shorted Bitcoin here because we had a move up into that 80 to 85K resistance, which according to the primary trend would be one of the most important areas to look for shorts, because anywhere between here and arguably up here, if you have a confirmation of a breakdown, that is most likely going to be your best entry to trade with this primary trend. So we entered a trade on that top on Bitcoin. And if we zoom in and we look carefully, this is basically a mean reversion trade. Because you can add some moving averages here and everything. And this is on the daily. A lot of people will be looking at this and they will look at this and say, hey, this is an uptrend, right? You have higher highs and higher lows. And this is the secondary trend, right? So you're looking at the secondary trend and you're thinking, okay, I want to short this, right? Even though it looks to be a very strong uptrend. But we also know that if we zoom out and we look at the primary trend, it's still very much a downtrend, right? So we might be trading a trade here that goes against the secondary trend and somewhat of a, you know, I guess not a mean reverting trade, but a trade that goes against the trend, right? I would never do this at the lows, right? I would never go long here, right? I would never go long here up to this level, because that's actually going long in a primary downtrend. But if you're trading a secondary trend like this and you know the context of the primary trend, it's very easy to see that, okay, we have, if we break below that level, then we have a potential, you know, higher highs and higher lows, and we potentially go into lower low and lower high. So once we break below that level, I would, I think this is actually where we shorted something like this, right? And then I think we exited down here. So this is a swing trade that goes against the local trend, but it's with the primary trend. And as you can see, prices go straight down to that level, and we have a break of structure. Now, if you have no idea about the primary trend, and I know a lot of people that looked at Bitcoin here and they saw, you know, okay, finally Bitcoin is going to get again align with the indices, align with the stock market basically. But then if you zoom out and you understand where you actually are in the primary trend, and especially if you compare Bitcoin with the stock market, you will very, very clearly see that they are in two different markets. How do I find the, let's see, BTC correlation? Where is the correlation? Yeah, so if you look at, let's say, for example, NASDAQ versus Bitcoin, you can look at where they actually are in terms of the primary trend. Okay, we got NASDAQ in white and Bitcoin in orange. And here you had the where both of these markets were in a bear market, and both of these markets entered a bull market, right? But only one of them entered a bear market, and that's Bitcoin. Here, when Bitcoin broke arguably, this structure, Bitcoin entered a bear market, while the S&P 500 was still in a very strong bull market. So having that context is super, super important, and you're never going to be able to find that context without understanding the primary trends. All right.
I have a question, Jonatan.
Yeah.
Has there ever been a time in history when NASDAQ was in a bear market, but Bitcoin was in a bull market?
No, I don't think so. I don't think that. When NASDAQ was in a bear market and Bitcoin was in a bull market.
Never, right?
No, I mean, because it doesn't make any sense. Like, why would it? Like, because Bitcoin is a risk asset and NASDAQ is a risk asset, right? But what's happening right now is that NASDAQ is being driven by the AI hype, right? And the AI hype is not what's driving Bitcoin right now. What's driving Bitcoin right now is the declining global liquidity situation and the overall sentiment and consumer confidence, because Wall Street is making a shit ton of money. Everyone who's invested, the companies, Anthropic, Nvidia, Anthropic is gonna, have their own launch their IPO. ChatGPT, OpenAI, they're gonna launch their IPO. SpaceX is gonna launch an IPO. We're talking about like SpaceX being like the biggest IPO ever, with a trillion in valuation, I believe, and it's just absolutely insane, right? And all of that is driving the stock market right now. And Wall Street is making a lot of money, but Main Street, normal people, they're not making a lot of money. They're not making more money. Their inflation is going up. They're not making a bigger salary. Like normal everyday people are not seeing these gains. So it's important to understand that this is the corporate world and Wall Street making a shit ton of money, and us who's actually invested in this. But normal everyday people who might not even have the money to invest, who's living paycheck to paycheck, are not seeing this. And that's Bitcoin. Bitcoin is it's normal people. That's why I believe Bitcoin is dumping. It's not a broad market participation in terms of everyone's making money. It's just that the stock market is making money because there's trillions and trillions and trillions of money just flowing into all of this. Yeah,
it was the opposite, right? It was we had the periods of time when NASDAQ was bullish, but Bitcoin is bearish, like for example now. But the other way around, it doesn't make sense.
It makes sense, right? Because there's more reason, that there is more potential reason for the stock market to rally, but there's not a lot of reason for Bitcoin to rally other than speculation at this point. Because
in general, right? In general, unless it's going to be accepted, and if you have some laws concerning, for example, crypto overall, there is mainly speculative aspect.
That's right. Guys, I promised a giveaway, but we're a little bit late for that. So I will instead do a double giveaway to tomorrow. I know Anastasia, you're gonna have a session tomorrow, so I'll be jumping in and we'll do a special giveaway tomorrow, guys. So make sure you come back for that and for Anastasia's session in the first hour of the live stream tomorrow.
Lovely. We're going to build upon what you said today, Jonathan, regarding the trends and learn a little bit how to determine the trends through
Okay, my
the
sound is
macro
disappeared, so I have no idea what you're saying, but I think it's wonderful.
Right.
Okay, now it's back. Oh, sorry about that. All right, guys. We'll see you all tomorrow. Thanks everyone for watching and listening to me talking forever about this.
Yeah, it was a great session.
I learned a lot. Thank you, Jonathan.
Thank you,
Thank you.
Jonathan. Thanks a lot. See you guys tomorrow.
See you guys.
Bye-bye. See you guys.